Welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm Dominic in for Bob Pisani today. We're joined by Tim Seymour of Seymour Asset Management here with me at the New York Stock Exchange Post 9, and also Christian Magoon, CEO of Amplify ETFs, coming to us from Colorado Springs, Colorado. Let's start today with Apple gearing up to report earnings tomorrow. It'll be a big one. After the closing bell, that stock is up 30% this year. Its results could move the needle in the markets in a pretty big way. Apple currently sits more than 250 and traded more than 250 ETFs, roughly 290 million shares in the market overall. Some of the ETFs with the most exposure to Apple include, of course, the XLK, the Spider S&P Technology ETF, Fidelity's MSCI FTEC Tech ETF, and the iShares IWY, to name a few. So what is the best way to play Apple earnings using exchange-traded funds? Tim, we'll start with you. Apple should just be a standalone trade because it is that big, it's that big of an influence. But folks use ETFs increasingly more, especially with regard to technology. So how exactly, as an asset manager, do you view these ETFs when it comes to a proxy for Apple?
Well, first of all, great to be on the ETF Edge, because this is the kind of a question people need to understand. And the XLK at 17% weighting just in Apple alone, despite the fact that there's some very big and powerful tech stories that make up market cap almost as much as even that. I think, ultimately, when you think about the triple Q ETF, that which is the NASDAQ 100, and you still have Apple's almost 10% of that weighting, you better have a view on Apple going into earnings. So Apple reports tomorrow after the bell. A lot of this really is pick your ETF based upon your view of Apple, right? So I'm long Apple. I believe that the services revenue profile is something that will continue to quietly move higher, even though I think it's gotten a little too much exposure right now. I think you have to get back to a company that has enormous capital markets flexibility. They can actually continue to buy back shares and do things that will certainly boost a return profile. And I think as we get into the third quarter, the iPhone shipments number is going to be something that people actually have to boost higher on their estimates.
Christian, do people out there, investors, especially on the retail side, do they have to pay attention to just how heavily weighted some of these funds are in a stock like Apple or a Microsoft or some of these other mega cap technology names? And if so, why exactly is it important to do that in the different range of ETFs that are offered out there?
Yeah, so one of the benefits, Dom, of ETFs is the majority of ETFs show their holdings. They're transparent. So on any given day, you can see just how much of a percentage Apple is or Microsoft is in a technology ETF. And that tells you, what your exposure is in these moves. And certainly for funds that have 17% or 15% of Apple exposure, tomorrow's Apple's earnings are going to be very important. The other thing you need to look at is cost, certainly. These ETFs all have different expense ratios. Looking at XLK, it's got the most Apple exposure at 17%. But it's priced at 13 basis points. Moving down one ladder, FTech is a 15% Apple exposure, but it's priced at 8 basis points. So you have to weigh those factors, exposures and costs, when looking at the right ETF to play different companies' earnings or exposures.
So Tim, let's toss it back to you. Is there a way that you prefer? We look at things like equal weighted or overweights in certain parts of the market. ETFs are index tracking for the most part. Is there a way that you are looking to play Apple? And if so, which particular ETF would you rather be looking at? Is it just simply the most heavily weighted one with Apple?
Well, first of all, I'd like to be in an active ETF, just to be clear. I mean, I know that the Amplify guys have a lot of very active ETFs that I think can be both thematic and timely and tactical. So, when I think about Apple, this is also a stock, frankly, that going into numbers has had a huge run. And I think expectations went from being overly negative and people looking at the downside in terms of their flat to slightly decelerating top line. So, ultimately, at the end of the day, I'm a stock picker. I want an ETF that I need to know what's under the hood. Christian talked about the expense ratios. Frankly, I think most investors are agnostic on what it costs them to own that unless it's really an outlier. And I think, frankly, if I have a management team behind that ETF that's doing good things on the active side, I'm willing to pay for that.
Well, it seems like such a long time ago, just the beginning of this year, when we heard about the revenue takedown that Apple issued its new guidance, and it seems like that stock has run so far, guys, since then.
It really has.
But certainly, guys, Christian and Tim, those thoughts on Apple, we appreciate it.